Hello, this is Steve Sanangelo from the SRS Rock Report with a new public YouTube video on big money and big trouble. And that's not an exaggeration. That's going to take a little bit of time. But what I want to show in this update is that the retail physical silver bar and coin investor actually holds most of the above ground silver investment of silver in the world away from big money. When I'm talking about big money, I'm talking about the institutions and large investors. And why is that important? Because institutional companies are actually, they own about 80% of the stock market and a lot of the bond market. So they control a large aspect of the flow of funds. And when they start to move into precious metals, especially silver, there's just not that much silver. So let's get started. Now, before I do, I just want to let you know that Cloud Hard Assets, which we sponsor at the SRS Rock Report, is still selling the 2021 and now 22 Krugerrands and Philharmonics at $3.50 over spot. If you can find a better deal, go for it. But they do provide some of the best service and low prices. Okay, I wanted to talk about this chart. This is the cumulative global silver coin and bar demand versus cumulative net silver ETF demand from 2008 to 2021 estimated. And they're going to come out, the World Silver Survey is going to come out with its newest survey May, but this is the estimate, including their estimate. And what I've done in the blue, in 2008, we had 187 million ounces of physical silver bar and coin demand. And we had net inflows of 101 million ounces of silver in the ETFs. So each year I added the net change. And as we can see, as the years went by, and we can see in 2009 and in 2010, we had flows in both. Both of them are going up, but then all of a sudden it stopped in 2011. The ETFs remained in a trend at this about 400 million ounce, a little bit more than 400 million ounces, until it started to jump again in the last several years. But physical bar and coin demand continued to add and add and add. And if we add up the cumulative, it's over 3 billion ounces. A lot of that is held in small and medium investors. Yes, there is some large investors. There may be some institutions, not many, that have purchased silver bars and coins and put them in private vaults or large vaults or safes at home. Most of this silver, whenever the price goes up and someone wants to sell the silver eagles or maples or 100-ounce bars, a lot of times they call up the dealer and they sell it to a dealer. This silver really isn't accessible to the big institutions and large investors. They're going to go into the ETFs. They're going to go into the big market where they can take billions of dollars, hundreds of millions of dollars, and point and click and buy the ETFs, even though a lot of the precious metal community don't think that's the smart thing to do. But again, large investors and institutions can't access that much silver. There's just not a lot of it there. So what we can see, retail physical investors have accumulated 3 times more silver than the net ETF demand, cumulative net ETF demand. Small and medium-sized investors hold more silver than is available for institutions and large investors. So in this period from 2008 to 2021, the ETFs accumulated about 1 billion ounces. That's what supposedly is in inventory. While the private investors have purchased bar and coins around the world, a lot of it is in Americans and Indian, German, and they have put it in private vaults or at home. So this is the current value. It is about 100 billion. That's it, 100 billion. 67 billion is in coin and bar, and total ETF is about 23 billion. Now, I'm not including the COMEX. I'm not including some of the silver in the LBMA. I'm just talking about the ETFs and the silver bar and coin accumulated. Now, there's an idea that there's a lot more silver in the world. And I wrote this for the gold subscribers at the SRS Rock Report. If you want to subscribe, you could. This is fascinating, going back through history so much silver that was coined during the Greek Empire, the Roman Empire, even the Middle Ages, is gone. It's simply gone. And they've done tests on the different coins that come from these periods, and they came from mines in that period. But when we go to these next periods, the silver's gone. And actually, C.C. Patterson did a study, and 100,000 metric tons of silver coin from the late 1880s to the 1950s is likely gone too. And that only means about 1/4 worth of silver lost a year per person in that period, in that 60, 70-year period when silver coinage was a big thing. So it's amazing. A lot of silver is just gone, which makes it another reason why it's a very important investment in the future. Now, I want to just focus on this understanding the difference between physical silver and the ETFs. And this is as of January 6th. We have the iShares. These are the main ETFs, and you can see them. There's funds, there's e-funds. I'm just concentrating on the ETFs. So if we look at these total, the top ones, there's about 1,036 million, a little more than 1 billion ounces, 23 billion worth. That's what it's worth, as I showed. Now, if we look at the SLV, this is how many shares at the peak. There was about almost 190 million shares owned by institutions. So right now, of the total shares of 574 million of the iShares, institutions right now currently own 162 million, which is 28%. And that's 3.4 billion. They own 28%, a little more than a quarter of the SLV. And let's look at the Sprott PSLV, because a lot of people in the precious metal community talk about how good Sprott, and it is. And we could see that while the SLV shares and inventory of their silver has fallen, we could see that the Sprott still is at a high, but their total shares are 432 million. Institutions only own 60 million shares. It's 14%, 460 million. So if you add the top two of the largest, well, the SLV is the largest and Sprott is close to the second largest, 3.4 billion and 400, it's not even 4 billion. And if we add the other silver ETFs and figure what the institutional ownership, it's 5.5 billion. That's all the institutions in the world, 5 to 6 billion. That's all they own of silver. And it is an ETF. And I'll show you that's not much at all. Because if we look at the world's top asset management firms, and I'm not just talking the United States, if we look at the top 5 US firms, it's 27 trillion. In the top 24 US firms, it's 526 trillion. So if we add them all, we're talking the top 30, it's probably 70, 75 trillion in the world. And there's only 6 billion of institutional ownership of silver. And what happens, and I've been talking about the energy cliff, where are the institutions and large investors going to get access to silver? They're not going to call up the retail dealers and wipe out their inventory in a matter of nanoseconds. They're going to go on the exchanges. They're going to go on and buy the ETF and talk about premiums like we're seeing on some of the silver coins. They're going to have premiums on the ETFs for a while and it's going to be very volatile. When big money, institutions and large investors try to protect wealth, when we start to go over this energy cliff, is it really going to negatively impact the value of most financial assets? So we're talking big money is in big trouble because there's just not that much silver. So another thing we have to take into account, things are starting to get much more crazy now. Ever since the pandemic shutdown, things are really starting to become volatile. And this is the U.S. federal public debt. Just in 3 weeks, from December 14th to January 5th, This was we had the debt ceiling was at 28.9 trillion. And then finally they voted on it on December 15th. They added 2.5 trillion. And that's supposed to last. It's supposed to last like 2 years. Already in 3 weeks, 803 billion. We're not too far away from 30 trillion. I mean, if you figure just what they've added in the debt, you divide it by how much the institutions own in the silver and the ETFs, it's 6 billion. I mean, what is that? That's 100 times. So it's just amazing how insane these financial systems are. What the Fed and central banks are trying to do to prop up the system to keep the business as usual going. And also, in one of my silver reports, I showed this. This is the total outstanding U.S. Treasury securities, not the debt. It's outstanding Treasury securities held and also held by the Federal Reserve. So as of the second quarter, 2021, there's almost 25 billion. Actually, that's a trillion. I'm sorry. It should be 24,800 billion. So it's 24.8 trillion. That's how much is the outstanding U.S. Treasuries in the world. Look how much the Federal Reserve owns itself, 5.6 trillion. It's almost a quarter. The Federal Reserve used to own only 9% right when the 2008, 2009 financial crisis. Now they own almost a quarter of the Treasuries. So this is another method of propping up the financial markets. And I wanted to show you this. We just have another chart here. This is, I talked about India. Basically, Indian silver demand just died for almost a year. It actually was a year, September 2020 to August 2021. Look at that, basically flatline. There's no imports. And then all of a sudden, boom, September and October. So the sleeping Indian silver giant awakened. Strong Indian demand will put more pressure on the silver market in 2022 and onwards. So when I'm talking about big monies and big trouble, it all has to do with energy. And the energy crisis I've been warning about, the energy cliff, is finally starting to hit the market. We're just seeing the first symptoms. Things could work out a little bit here for a while, but then they just get worse as time goes on, because this is not a short-term problem. This is a predicament, an energy predicament that we cannot solve. So I just wanted to share, and I wanted to get the silver investors to understand there's two different markets. There's a small and medium investor who buys physical. They also buy the ETFs. Some people like to buy the ETF. That's what you want to do. You want to buy the Sprott ETF, fine. But a lot of people buy physical. They take a delivery of it. They put it in a safe at home. They have it at a private vault. That is not going to be really accessed. Now, prices go up. People may sell some of that. But when big money moves in, this is where they're going to go right here. This is it. That's all they're going to have. There's a little bit more. We had all the silver. It's about 1.5 billion ounces of available silver in the LBMA and even in the COMEX. There's not that much silver, 1.5, 1.6 billion. This is where a lot of the silver investment's been held. It's held privately. So we have to give hands-on to the small and medium investors who have been acquiring a lot of silver, taking it off the market. And when big money tries to move in, it's going to be very hard for them to acquire silver, which means much, much higher prices. So I'm not looking for big bubble moves in silver, big price shocks going up to $200-300. I'm not saying it's not going to get there. What I see is silver just gets stronger and gold as time goes on, because most financial assets in real estate are going to get into serious trouble when we start going over this energy cliff. And unfortunately, most investors are not prepared for it. So it's important that we continue to purchase and own physical metals, because they are a real store of wealth in the future. Thank you very much. If you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. And also check out the SRSRockReport.com website. We've got a lot of interesting subscriber content. Thank you.